Hi, I'm Jim Smith from Pacific Wealth, and today we're diving into the changes to New Zealand's Active Investor Plus visa, which come into effect from April 2025. If you are considering an investment-based pathway to residency in New Zealand, you'll want to stay tuned. In this video, I'm going to break down the new investment options in detail so you know exactly what this means for you. The Active Investor Plus visa is designed to attract high-value investors to New Zealand, supporting local businesses and fostering economic growth. The current settings, which have been in place since 2022, have not been a big hit with investors, but this is set to change from April with a range of changes to incentivise more foreign investment into New Zealand. The new settings have two investment categories, being growth and balance. Let's take a closer look at each. The balance category is the simplest from an investment perspective and can include very low risk investments such as New Zealand government bonds, as well as riskier but well established listed New Zealand companies. The category has a minimum investment requirement of 10 million New Zealand dollars. Investments must be retained for 5 years and you will need to spend a minimum of 105 days in New Zealand over the 5-year period. If you invest more than the minimum, you could qualify for a reduced stay requirement. For example, investing $11 million reduces the stay requirement to 91 days, 12 million reduces it to 77, and 13 million reduces it to 63 days. The balance category includes a broad range of investment options which were approved by Immigration New Zealand. Acceptable investments include government, local government and corporate bonds, listed equities, property development, as well as philanthropy. A relatively simple and hassle-free way of meeting the requirement is by building a portfolio consisting of listed New Zealand shares and bonds. For example, you could create an investment portfolio with a proportion invested in New Zealand shares and a proportion invested in New Zealand bonds, and you can vary the proportion in each depending upon your desired level of risk. For example, you could hold a basket of between 15 to 20 of New Zealand's largest companies, whereas in the defensive allocation you could hold, say, between 8 to 12 New Zealand bonds, which could include New Zealand government bonds which have a AAA credit rating from Standard & Poor's, various New Zealand banks with a AA negative credit rating, as well as other companies and local authorities. It is therefore possible to build a diversified portfolio tailored to the risk level that you're comfortable with, that is easy to buy, sell and maintain, and can be designed to fit in with your other investments. The growth category has a lower minimum investment requirement of 5 million New Zealand dollars. The key aspects of this category include that the investments must be in either managed funds or direct investments. They must be retained for a minimum of 3 years, as opposed to 5 years under the balance category, and there is a lower minimum stay requirement of 21 days over the investment period. Unless you have a specific interest in an industry or want to be actively involved in a company, many investors are likely to go down the managed funds option. Under this route, there are around 30 different investment options consisting mainly of private equity funds, venture capital funds, as well as private credit. These funds will typically invest into small unlisted New Zealand companies, some of which will be at an early stage of development, so the underlying investments should be considered as high risk. Whilst this category has higher potential returns, you'll need to be comfortable that there is no guarantee that you will receive all of your money back. One way to help reduce the risk is by spreading your investment across a number of funds. One way of doing this would be to firstly define your requirements, such as your risk appetite, whether you need income, and do you have any particular investment preferences. Narrow down the list to those that meet your criteria, then undertake some more detailed due diligence on the remaining funds. Then identify between, say, 5 and 10 different investment options which you can spread your investment across to help reduce the risk. There are many different pathways to attaining residency in New Zealand, and you will need to decide if the Active Investor Plus visa is the right one for you. You can explore other options on the Immigration New Zealand website, but I would recommend speaking with a licensed New Zealand immigration advisor. If you are looking for a professional immigration advisor, please drop me a comment or send me a message and we'll be happy to make an introduction. If you decide to apply for the Active Investor Plus visa or just want to explore your investment options, please reach out to us and we can help work with you to determine the best approach, taking into account your financial position, your objectives, your risk appetite and any personal preferences you may have. If you are interested to learn more about investing or moving to New Zealand, we've created other videos that you can explore on our YouTube channel. You can also visit our website www.pacificwealth.co.nz, and if you have any questions, please feel free to reach out to myself or a member of the team. Thank you for watching.